states, then pass from the state onto local municipalities based on population. Most of the country that's happening, but the Treasury Department has somehow chosen to rely on a definition from the Census Bureau.
Hello, today we're going to be looking at this live Treasury Secretary Janet Yellen testifying before Congress on the budget. We'll see how this goes.
And gives a totally strange conclusion in our state. Counties in Vermont are not general units of government. We have 14 counties. The only county officials in Vermont.
Well, that's getting a little boring. We'll check out some other stuff. So over here we got the price of Bitcoin right now. It's at 33,401. We'll see. Hopefully it starts increasing like it's been over the last couple hours. Then we got a whole bunch of stocks we can take a look at. We got the NASDAQ starting to go up, probably from the meeting. So we'll take a look at that. Still got the old guy talking. But the NASDAQ's starting to go up, so that's good. Let's see, we got Dogecoin. Yeah, that's really starting to come up. It's above the long-term moving average, which is good.
These side judges who might talk.
Yeah, I was taking a look at the price of steel. It's going down lately. And also you can take a look at the price of lumber. That's down quite a bit, which is good because like I want to get a house. So you need the price of lumber to be down low. So that way you can get it for a good deal. Because I need that to build the house. So if we look at it over the last year, see like it got super high to like 1670.5 and now it's down to like 866. So that's about like a 50% decrease, which is great because you use lumber for all sorts of things from building like go-karts to building houses. Alright, let's see if she's talking.
Make those distinctions. But we want to work with you to find a path forward and to resolve the concerns that you have. And you've pointed out that there are distinguishing factors with respect to how Vermont counties operate relative to counties in many other states across the country. If you'll have your office work with our staff, we will try to find
we're doing that now, but I thought the law was pretty well clearly written. If you don't have a county government as such, I mean, if you got a county government where two people arrange to have the snow plowed around the courthouse, and they suddenly got $10-15 million, and they're like, even our best year, we don't get that much snow. And I think it's written in such a way, the law, I read it as I read it, is written the money go to the states, and the states can then distribute them to the municipalities, and we do have municipalities, of course, that do have everything from police forces to normal town, city government, and they could use the money. So we've been working with your staff, but please tell them to go back and read the law. I think it's pretty clear in the face.
I think part of the issue was, do the counties have governmental responsibilities? And it sounds like in Vermont they have some, but they're exceptionally limited.
It's like turn the lights on in the courthouse.
So
if it's a county with a county court.
So my staff understand that this is a significant concern, and we'll work closely with you to try to find a resolution.
Well, and I would also point out another thing. In rural states, the IRS is the only element of one of the only elements of the federal government that taxpayers interact with annually. Now, if you don't have internet service or they rely on phone or in person, it's a problem because the IRS is nearly impossible to reach by phone or in person. And of course, they're getting less and less centers.
Hello, anyone?
And I live 6 miles outside of our state capital. I pay a premium amount for my internet service, and there have been days that it's worked. We usually mark it down on the calendar as very special days. We celebrate those. And I think I pay for it for a year. I can count on at least a week or two out of that year. But the point is, I mean, I don't have to worry. I go to my office in Montpelier or Burlington, or home down here, and if I got things I got to go back and forth, I can do it. But in many rural areas, in states that we all represent, that's not the case. So take a look at this because
You hear crap from a bunch of hippie freaks living in denial. Screw you guys, I'm going home. But Carmen, we're trying to... screw you guys,
Funds can be used for broadband, and the rescue plan contained other funds and programs also that can be used for broadband.
But again,
You hear crap from a bunch of hippie freaks living in denial. Screw you guys, I'm going home. But Carmen, we're trying to... screw you guys,
Thank you very much, Senator Leahy.
Thank you, Senator. Senator Kennedy.
Thank you, Mr. Chairman. Madam Secretary, thank you for being here. According to the Department of Labor, I believe inflation was annualized was 5% in May. I know you're not clairvoyant, but you're experienced. Where do you think inflation will be at the end of this year?
Well, let me go to 2022.
No, if you could go to the end of 2021 first for me.
So I believe that my expectation, although there's a lot of uncertainty, is that the monthly data, the data that would pertain to what happened in a given month, that those numbers will come down.
But by the end of this year,
I
do you expect the inflation to be more than 5% or less?
I believe that the monthly numbers are likely to generate annual inflation rates. If you take the monthly number and ask what would inflation be if it continued at that pace for a year, I believe that will come down toward 2%. But typically inflation rates...
Secretary, I'm sorry to interrupt you, but my question was pretty simple. Right now in May, on an annualized basis, we both know what that means. Inflation was 5%. I know you're not clairvoyant, but where do you think it will be at the end of this year?
So the type of inflation number that you're talking about compares the level of prices this month with what they were a year prior.
That's correct.
And that's different than what happened over the span of the month.
I understand that, but I'm asking
By the end...
I'm asking you,
inflation...
based on a year ago, this is not a complicated question. I'm not trying to be rude, but this is not a complicated question. We're at 5% now, based on where it was a year ago. So now we know what we're both talking about.
For the rest of
will it be higher at the end of this year, or will it be less?
12 months, I believe it will come down.
You think it'll be less by the end of this year?
Than 5%, yes.
Okay. What makes you think that?
Because I believe that as the economy is opening up again, prices that fell enormously at the beginning of the pandemic are returning now back toward normal levels. And so what we're seeing in these year-over-year comparisons is of prices which are now reasonably normal, or in many cases at levels that are still somewhat below normal. We're comparing those levels with highly depressed prices the year before.
I understand.
And that will...
But I've just got a limited amount of time, Madam Secretary. If you think 5% inflation in May, and you think it'll be less at the end of the year,
Yes.
then why did the Federal Reserve announce that it was going to, thought they were going to have to move their interest rate increases sooner and faster than what they had originally expected?
Well, I don't really want to comment on the Fed, but I would simply say that is not an announcement that they made.
Well, the market sure reacted. Sounds like the Federal Reserve's worried about inflation.
I would just refer you to the comments that Chair Powell made in testifying yesterday and at his press conference.
Well, but I'm talking about the action the Federal Reserve took. The Federal Reserve met recently, and they said, look, we know we told you this, but things have changed, and we're now telling you that we're likely to have to raise rates sooner and faster, let me just finish, than we originally told you. Why do you think they did that? Because they're concerned about inflation, aren't they?
That is not what they did. Several individuals wrote down in their own individual forecasts, which were published, that they saw it appropriate to raise rates sooner than previously.
Why then did the Federal Reserve last week raise the interest rate on excess reserves?
That's a technical adjustment that they made because the federal funds rate had fallen to the very bottom of their target range, and it was a purely technical adjustment. Look, it's not appropriate for me to discuss Fed policy.
Well, sir,
I don't want to comment on...
It is. I'm not asking you to make Fed policy. I'm asking your opinion. And usually when the Federal Reserve raises interest rates on excess reserves, they're trying to contract the money supply.
No,
the reason they're trying to contract the money supply is because they're worried about inflation.
It's a purely technical adjustment. They made clear in that the stance of monetary policy has not changed at all, but because short-term overnight rates were drifting to the very bottom of their target range, they made small adjustments.
Okay. Let me stop you because I've only got a minute left. Here's my worry, Madam Secretary, and I hate to have to interrupt you, but we only have so much time. I know your job is to put the best face on it. And I understand the Federal Reserve's job is to put the best face on it. But inflation at 5% annualized gets my attention. When the Federal Reserve says, or even certain members, they say, nothing to worry about here, nothing to see, but by the way, we're probably going to have to raise interest rates sooner and faster than we thought. And when I see them raise the interest rate on excess reserves to get money out of the money supply, that tells me they're worried about inflation. And here's my question. Nobody's clairvoyant. A lot of these experts that you talked about never called the recession in 08, 09. A lot of these experts at the Federal Reserve, what if they're wrong? And the president has been adamant that he's not going to raise taxes on middle-class Americans. He's allowing that to happen right now because inflation, prices are rising higher than wages. And 5% inflation is a tax. It's a tax on food, it's a tax on energy, it's a tax on everything. And we can say it's temporary, but the actions of the Fed indicate to me they don't think it's temporary. Your thoughts?
Madam Secretary, I'm going to have to leave it at that, Senator. We'll have another round.
Well, others went over, Mr. Chairman.
What's that?
Others went over.
Actually, they went over about the same time. Let me call on.
Can I get an answer?
On the next, we'll have another round because I'm just trying to keep everything, within the fair range here. I understand that Senator Coons, who's been very patient, has been understanding to let Senator Moran have a short statement, and then we'll go to Senator Coons.
Chairman, thank you, and Senator Coons, thank you for allowing me 30 seconds. I hope that's not a terrible burden on your schedule. Thank you. Madam Secretary, you and I visited, I questioned you in the Banking Committee in March, and I just wanted to be here today. I have two other hearings that are ongoing at the same time, but I wanted to be here to thank you for making clear in Treasury's updated frequently asked questions. It was just released today that the coronavirus state and local fiscal recovery funds may be used for grants to small businesses, to nonprofits to cover utility costs. This will alleviate a lot of consternation across Kansas and Midwestern states impacted by a February cold snap and elevated natural gas prices in the midst of dealing with the economic impacts of the pandemic. So thank you for making that clear, and I assume that I'm telling the story as it is true.
Believe so. Thank you.
Yes, ma'am.
Thank you, Senator. Senator Coons.
Well, thank you, Chairman Van Hollen, Ranking Member Hyde-Smith. Senator Moran is going back to serve as the ranking on the CJS Appropriations Subcommittee hearing that I, too, am supposed to go back to. I am very much looking forward to the second panel. Appreciate Secretary Yellen's testimony and leadership. And Chairman Van Hollen, good to see you leading this subcommittee so ably, and to see the team that supports and makes possible the work of FSGG. Madam Secretary, if I might, you and 5 other former Treasury Secretaries have noted year after year, Congress after Congress, that the IRS lacks the resources to effectively and fully enforce tax payment. In fact, you made the somewhat striking and memorable assertion that the IRS at this point has the fewest auditors since the Second World War. The tax gap is estimated as somewhere between $600 billion and $1 trillion a year, and it is something that is the topic of active negotiation right now in terms of how to pay for a bipartisan infrastructure bill. How would the IRS ensure that new auditors, new enforcement efforts are focused on high net worth individuals, individuals with complex financial situations and international and multinational corporations, which are more difficult to audit, as opposed to lower income people whose returns are more simple to audit?
Well, the purpose of the mandatory funding that the president has requested for the IRS, he's requested $80 billion over a decade, is really supposed to be a long-run program allotment that would enable IRS to hire, train auditors who have the skills and the long-term perspective to be able to focus on high net worth individuals, high income individuals, and partnerships and complex arrangements in corporations. That's where the tax gap is.
Right.
And the purpose of that funding would be to improve compliance in those groups where underreporting is highest.
And what's your rough estimate at this point of the multiplier for dollars spent on additional enforcement, dollars received in terms of additional compliance?
I believe we estimate that the $80 billion appropriation would generate around $240 billion over 10 years. The long-run payoff is, I think it's estimated by the IRS to be close to 5 to 1. And I want to emphasize, it takes a long time both to build up the resources and these complex cases take many years. And so there are enormous gains beyond the 10-year horizon as well that you would see in the budget. So I believe the IRS estimates are something like 5 to 1 in terms of income collected per dollar spent.
Madam Secretary, for the years that I've served on FSGG, I've also paid close attention to the most frequent complaints from Delawareans who often reach out to my constituent services folks to say that they're having difficulty getting someone on the phone, getting their tax returns and refunds processed, more recently getting the economic impact payments. I'm assuming that an increased budget for IRS taxpayer services will directly benefit and impact that. And I'd love to hear your thoughts on that. But first, I'm going to go to a more complex subject for a minute, since we may have a return of another member who wants to question. I am very interested in how you see carbon border adjustments working out, both competitively for the United States and in terms of its impact. I'm someone who's introduced a number of bills, one bipartisan, more recently ones that are just Democrats, that would place a price on carbon, and I'm convinced that that has the single greatest leverage in terms of achieving progress on climate change. I'm the co-chair of the Bipartisan Climate Solutions Caucus, and we've debated and discussed this with many leaders from the private sector, from financial services, different advocates and organizations. And I think that there is a moment here where, as discussed at the G7, the EU is on the verge of implementing a border carbon adjustment. And there is the possibility that the United States, without imposing a fee on carbon, could simply deem the social cost of carbon and of other greenhouse gases at a certain amount and begin to implement that in order to avoid other countries imposing a carbon tariff against our exports and making us less competitive. How do you see that playing forward? What do you think are the models for the actual cost of greenhouse gases sufficiently detailed for us to be able to implement something like this? And how is the administration thinking about border carbon adjustments in ways that would keep American industries and services competitive globally?
So I think we're just beginning to get a handle on this question. There's a lot of work to do to think this through. I mean, as you know, the president has proposed an ambitious and comprehensive agenda to try to reduce U.S. Greenhouse gas emissions, and has made our nationally determined contribution is an ambitious one. And, you know, he's proposed to do that through a whole variety of different carrots and sticks. Remove existing subsidies for fossil fuels, tax credits for renewables and for electric vehicles. He hasn't taken the approach that some countries have of simply having one system with a single carbon price.
Right.
But I think that if we do make the progress that we hope for, that the areas that are covered will be covered, say, by EU carbon border adjustment, that we will also be producing those goods in a manner that is environmentally friendly. And if we are able to do that, my own view would be that we should subject to, say, the EU's carbon adjustment price.
So if I hear you right, to summarize, in a larger sense, if the Biden administration's plan and agenda is fully implemented, we ought to be able to go to our Canadian neighbors, to our EU trading partners, and say, we shouldn't be subject to this border adjustment tax because we are making robust progress towards our national goals. Let me just close, and I'd love to hear more from you about this. I was talking to Jay Powell about this yesterday and the research that's being done within the Federal Reserve System, because there's a lot of research to be done for this to be better understood. I just want to thank you for what I think is an appropriately robust request for funding for the GEF and the Green Climate Fund. A modest but necessary request for $15 million to continue to implement the Tropical Forest and Coral Reef Conservation Act. I'm working with Senator Portman on reauthorizing it. And I'll just simply note for the record that my constituents are pleased when the wait times go down, and just desperately annoyed and angry when the wait times go up. And improving IRS service standards is something that I would hope all of us could agree is well worth investing in.
Completely agree. I mean, that's will be an important use of funds, is to greatly improve taxpayer service.
Thank you very much, Madam Secretary. Thank you, Mr. Chair.
Senator Coons. Madam Secretary, we're going to do another 5-minute round of questions. I don't know what other members of the committee will or not be returning, but I do want to quickly turn to the debt ceiling because, as you well know, the debt ceiling is currently suspended until July 31st, just end of next month. After that point, the Treasury Department can prevent default for a brief period of time with its so-called extraordinary measures, but Congress must ultimately raise the debt ceiling to prevent a default of the full faith and credit of the United States. There are murmurings that some members of the Senate may want to try to use this as a political cudgel to extract concessions on other things. Could you speak briefly to the consequences of a default on our national debt, or even creating uncertainty around whether or not we're going to make good on our full faith and credit?
I think defaulting on the national debt should be regarded as unthinkable. Failing to increase the debt limit would have absolutely catastrophic economic consequences. It would be utterly unprecedented in American history for the United States government to default on its legal obligations. I believe it would precipitate a financial crisis. It would threaten the jobs and savings of Americans, and at a time when we're still recovering from the COVID pandemic. I would plead with Congress simply to protect the full faith and credit of the United States by acting to raise or suspend the debt limit as soon as possible. Preferably, you mentioned July 31st is the date that the debt limit suspension ends, and I would really urge that the debt limit be raised or suspended again before that. And, you know, this is not about authorizing additional spending. This is simply about the government paying its bills, making good on the payments that are implied by the tax and spending decisions that Congress has made.
I appreciate your underscoring that very important point. This is about paying the bills that are already due and owing. Do you have an estimate as to how long use of the emergency measures would last us in this current economic environment?
Well, we're constantly trying to refine our notions on that. I don't have anything specific, but, you know, these are times, especially because of the pandemic and the programs that we're engaging in, when there is a lot of uncertainty around payment flows and the timing of payment flows. And, you know, we don't want to just look at what is the most likely time that we could make it to with extraordinary measures. We can't tolerate any chance of defaulting on the government debt, and there is a lot of uncertainty. It's possible that we could reach that point while Congress is out in August, and I would really urge prompt action on raising the limit or suspending it.
Thank you, Madam Secretary. I just want to put two issues on your radar screen. I don't expect an answer today, but so Senator Toomey and I, in the last Congress, authored the Hong Kong Accountability Act. It was passed into law. I was pleased to see the Biden administration sanction a number of officials who have been complicit in undermining democracy and human rights in Hong Kong. But that law also requires sanctions against any financial institutions that are aiding, abetting, or facilitating those individuals. And Treasury has not imposed sanctions on those financial institutions. Maybe you haven't been able to identify any such institutions.
We have not.
Yet, I think Secretary Toomey and I are in the process of asking for a briefing with respect to Treasury's capacity to monitor these things. The other thing I wanted to mention is the Brink Act. This is also legislation that Senator Toomey and I and others pushed for. that applies secondary sanctions on North Korea.
Yes.
And here there's a discrepancy because the UN panel of experts just earlier this year, found that there were huge holes in the sanctions regime, that there were Chinese entities that were essentially facilitating, payments to North Korea that would be subject to secondary sanctions. And so we do want to follow up with you on that as well.
We would be glad to discuss that and follow up.
Thank you, Madam Secretary. I don't know if... Great. Madam Secretary, thank you for your testimony. Thank you for requesting this increase in funds for CDFIs, which play an essential role. And now we're going to get some firsthand accounts of how important they are. Thank you. Thank you very much.
Thank you very much.
Next, we're going to bring up our distinguished next panel. Is the vote started? All right. Welcome, everybody. We have three terrific witnesses for our next panel. Mr. Noel Andreas Pollo, who's the Deputy Assistant Secretary at Treasury for Community and Economic Development and is a real expert in this area of CDFIs. And I've had the privilege of talking to him previously and grateful for your being here. We also have Mr. Joseph Haskins, Jr. He's the Chairman and CEO of the Harbor Bank of Maryland, which is in Baltimore. And on a personal note, somebody who I really rely on.
Hello, everybody. How are you doing? I'm just watching Janet Yellen talk about the budget. We'll see what's happening.
Help they need, which will introduce our third panelist.
Thank you, Mr. Chairman, and I am really pleased to have with us Andy Anderson of Anguilla, Mississippi, and that's kind of hard to pronounce, and we're a long way from Anguilla, Mississippi right now, but I so appreciate each of